Hi everyone, let's look at my bullish and bearish preferred scenarios on the low time frame and the micro. The bullish medium time frame Elliott Wave scenario for Bitcoin is that wave 4 is in over here and we are looking for a wave 5 to the upside. In this scenario, this is then wave 1, a WXY in a wave 2, and now we are looking for a wave 3 to the upside, which is counted as a 1, 2, 3, 4, 5. So currently inside or just finished this wave 4 correction before eventually we can expect more upside. The invalidation for me for this bullish scenario is if price would go below this level over here at about 29.1k, as then the retracement for this potential wave 4 is going to be very deep, and it is more likely we are going to see more downside to come. If we then look at the bearish scenario, which is also very important, wave 5 is already in, and this 3-wave structure over here is part of a wave A, followed then by a 3-wave structure in a wave B, which is then a zigzag. So it's a 5-3-5 move, where this wave C over here consists of a 1, 2, 3, 4, 5. So wave 4 is already finished, and wave 5 is the wick over here. And what is important to note for this bearish scenario over here is that the maximum target for an expanded flat wave B, which then has a wave A, B, and then expecting a C to the downside, so wave B goes above the origin of wave A, the maximum target for wave B is the 1.618, the gray one over here. And as you can see, we wicked against the 1.618 twice. So the invalidation for this scenario is very clear. If price is going to take this high again, I would expect more upside, and that would be the invalidation for this scenario being an expanded flat A, B, C to the downside. Another thing to note is that we have the orange line over here, the 1.618 in orange, which is a rare target for a zigzag. So this is a trend-based sub-extension pulled from the low over here to the high of wave A to the low of wave B. A rare target for a zigzag in an ABC is the 1.618, and as you can see, also this 1.618 has been wicked into now a couple of times, 3 times to be exact. So in this scenario, you definitely don't want to see price go above the invalidation at 30.6k, but this trading scenario is still valid as long as price is not going to go above this high. If we then go to the micro scenarios and we start with the bullish preferred scenario over here, we have this scenario going on at the moment, and I will explain why I expect maybe a little bit more downside to come as well, because what is actually quite, or maybe quite confusing, is that, hey, we have a wave 1, 2, and then is 3 going to be here, or is this going to be a 3, right? That's the question, like, is this 3, and is this then part of 4 before 5, or is this the high of 3? And is this only the beginning of a wave 4 and then a corrective move to the downside? Now imagine that wave 3 is the left wick over here, and we are currently at the third and the final wave of then a wave 4. So this being like a 3-wave structure. The little bit of a problem that I have with this scenario is that over here we then have a nice 3-wave structure, okay, right? Then we have a 3 waves to the upside taking the high of this wave 3. So we immediately start to think about a flat scenario, right? Or a WXY. And a flat scenario would be a 3-3-5. However, we have a 3-wave structure over here, so we now have to think about a W, X, and then a Y. However, if this is a Y wave, which then has to consist of 3 waves as well, this is, or has to be, a zigzag structure, being an A, B, C. So if I put this on my chart, A, B, C, you can see that wave C should then already be ended, because this structure over here, this range can never be part of a potential 1, 2, 3, 4, 5 to the downside. Like, that doesn't work, right? Elliott Wave wise, it's not nice to see. This then has to be the ABC. But the problem I have with this is that this wave C most common target is down here, starting at 29.765 all the way to basically the golden pocket and the area that we have down here at 29.6k. And as you can see, if this is an ABC, yes, it did hit the very rare target for a wave C in a zigzag over here, but the 0.618 has also not been very nicely respected with all the candles going below. So because we basically went below the 0.618, but currently we are ranging, and also wave C basically finished above the 1-to-1 of this ABC, I don't really like to, well, it doesn't really fit a bullish scenario to be honest, right? So seeing price continue to the downside, it wouldn't really be nice, and a nice Elliott Wave structure. So okay, what if we then put this wave 3 over here? Well, in this scenario, this then is the first structure of a potential correction for a wave 4. Now this can be then also a zigzag, but then we have the same problem, right, with then wave C being too short for the most common target of a wave C, and also actually too long for the 0.618, which is a minimum target and rare one for a wave C. So in that scenario, you have to start thinking about maybe other opportunities. Is this maybe a leading diagonal, for example, and is this then a wave A, followed then by a wave B, and then a wave C? Now that would be something that is still possible. However, seeing the price action that we have at the moment, it might be a little bit early to talk about it, but as you can see, I do have it on my chart and I'll go through it in a second. But this could then be a potential A wave, a B wave, and then a C wave. But of course, the next update will be at 7 p.m. Central East European time later today, and then we have a bit more price action to see what has been going on, of course, the hours that are still following after this video. So in this scenario, having wave 3 over here, yeah, so this wave 4, this beginning is not too nice, but this region over here where we have the golden pocket taken from the lows to then the highs, or this high doesn't really matter, it's very closely related, and we have the 0.382 as well, which is pulled from the low of 2 to then the highs as well. It's a little bit of Elliott Wave confluence over here between 29.6k and basically 29.5k, and for me, this long scenario would kind of only be valid if we're gonna see bullish divergences, because if price is gonna do this, then obviously, of course, you like this is no long setup, and also bullish divergences I think would be quite important if price is gonna go down to this region as well. And then I'm talking about the divergences of this range with what we're seeing over here. So at the moment, if we look at the divergences, you want to see bullish divergences then between this little range over here and the higher low that we're going to make. So a higher low on price, but then a lower low on the CVD. But you can see that currently the yellow line, for example, is ranging over here, while the CVD for this range is all the way down here. So it needs to go down quite a bit, but we have news coming, so maybe I'll talk about that in a second, as well as the blue line ranging up here, while the range low, CVD low, is all the way down here, so it still needs to drop. But of course, if price drops, the CVD will drop with it, and then the question is, will we see divergences or not, or will we maybe see a bounce and then eventually have divergences between these, creating a higher low on price but a lower low on CVD? Yet to be seen, yet to be seen. If we then go to the bearish scenario, we have wave 4 and 5 already finished. So this is 3, this is 4, this is 5. Now in this wave 4, we then have this to be a W, an X, and then a triangle over here in a wave Y for then a wave 5 to the upside, which is this final leg to the upside and in an impulsive structure. In this scenario, we have a 1, 2, 1, 2 and expect a impulsive move to the downside in a wave 3. Now this works, right? So in this scenario, this blue wave 1 does not have a target compared to this green and also green wave 1 and green wave 2. Wave 1 can end wherever it wants, preferably below the green one over here. So then we have a nice 1, 2, 1, 2, and then eventually expecting a 3 to the downside. Now the invalidation is if price would go above the high of this green wave 2. And at the moment, what we do see, if we take the fibs from the high of 2 to the low of this wave 1, currently this blue wave 2, in this then being a 1, 2, hit the rare target for a wave 2, which is the 382. The more common target for wave 2 is the 0.5 to the 0.786, which by far the most common target for a wave 2 is the golden pocket, sitting at basically 30.2k. But of course, the minimum target, basically, even though rare, has been reached. And what I would like to see in this scenario, because again, CVDs are quite important as well, is actually see some bearish CVD as well. Because over here at the moment, if this is a 1, 2, 1, 2, and we expect a lot more downside to come, it would be nice to see some bearish divergences. Of course, it's not a must. And actually at the moment on the very low time frame, we have them, by the way. But it would be nice to see divergences between this high and then the lower high. So between this high, so we have a 1, 2, 1, 2, and then we make a lower high, but then on the CVD creating a higher high. And at the moment, that is not the case. So yeah, it would be nice to have this in order to then have this potential trading scenario activated with the stop loss above over here for the invalidation and then trading it to the downside. Also, news is coming, which I think is incredibly important. It's going to be probably quite a volatile week in general, where today, 2:30 Central East European time, from the moment this video launched, it's 1 hour and 30 minutes after this video is online, we got the CPI news coming in over here. So high impact news as shown by the red flags. which can definitely create volatility on the chart. So make sure that whatever you do, trading wise, and your decisions, your plan, your strategy, be safe trading around news, because it can be very wicky, very random, and very, very volatile to the up or to the downside or the upside, either way. But this is at least a scenario to take into account. Now, as a little bonus, I do want to show you this scenario as mentioned in my morning video earlier today. I had this potential scenario over here. Doesn't look that great at the moment because of the price action that we have, the big range, which does not look impulsive for more upside to come. That's why the stop loss, which was first down here, can now be at break even. For example, just in case. And also, if we go again to the lower time frames that we have at the moment, this can change. Even when the video is online, this can already be changed. But we do have some bearish divergences between this high and the highs over here. So a lower high on price, but currently a higher high on the CVDs, both of them. But those can be leading as well, right? So yeah, that's the question. We don't really know. It's definitely not per se I wouldn't, that's my personal, no financial advice, of course, but longing over here at the moment is not the greatest. I think the one-to-one over here, as mentioned earlier in the morning when price was ranging over here, was the nicest entry. But this target box is the target box for a potential WXY. But as mentioned, this Y is not a very great looking wave Y. If we then do look at divergences, yeah, we have a little bit of bearish divergences very, very locally. That is very important to take into account. There also is some bullish divergences between the low over here and the lows over here. So a bit of a higher low and a lower low on yellow and on blue. But I think at the moment, the more local the divergences, the more usually trustworthy or important. So keep that in mind. And then finally, the bearish divergence, the leading diagonal, doesn't look that great because of this wave 4 starting to become very, very long at the moment. However, this wave 2 hit a common target in a leading diagonal. This wave 3 hit a common target in a leading diagonal. And this wave 4 currently also hit a common target for a leading diagonal, which is the 382 as a minimum target. So this is definitely a scenario to keep in mind at least. But yeah, we have to wait and see what price, of course, is going to do, especially with the news kicking in. So this is what I wanted to say. A couple of the scenarios that I mentioned, and also the problem that I have with this structure over here, where we have this potential long setup with the stop loss over here to the upside, potentially, depending as mentioned on how price goes to the downside. The more bearish scenario, 1 2 1 2, before then a move to the downside. Bearish divergences would be nice, and keep an eye on the news. Invalidation is up here. Then we have the alternative where the stop loss should be break even. If price moves to the upside, absolutely perfect, great. If it goes to the downside, well, it's break even, easy as that. And then eventually, no financial advice, the ending diagonal where this wave 4 starts to become quite long, but this is still a valid scenario. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.